focus on generating that liquidity from outside Nigeria to ensure that that hard liquidity is in the pockets of Nigerians. And so as we think about our expansion, we need to make sure that we're not just solving the problems for the largest businesses in Nigeria, we're doing so for small and medium businesses and consumers. Because today, small and medium businesses and consumers have to worry so much about how to make payments. There's just so many things that are outside the core scope of their business. And so where I think fintech can play a core role is ensuring that these businesses can focus on just that, their business.
We've gone beyond the four walls of mutual funds, stock trading, and everything your typical asset management company will have, to understand the fact that tech is a new oil. And that's why we have ARM Innovation Labs, which I lead today. And the key focus of ARM Labs is identifying viable tech startups within this ecosystem who are positioned to take us to the next phase. So I'll just wrap up to say that from our standpoint on innovation and financial inclusion, we actually look out for startup companies that are contributing to the ecosystem, not just building mobile apps that everybody's having today, but how are you touching the last person in the village? How is Mama Risika getting value from what you're building? That's what we're focused on.
Now, in terms of financial inclusion, I think one of the two things I can think about is first, offline collections, right, through agents and aggregators to places that they don't have ATMs and for people that are unbanked. And then I recall, early 2020, when the Pay with Bank transfer also came up. So Pay with Bank is essentially, you don't have to own a bank account, but you can generate virtual accounts, right? If you want to pay on the merchant site. So that also encouraged lots of people that were previously unbanked to come on. They want to buy something, they generate an account with a partner bank. Those are the two innovations that I'll refer to now. Thank you.
Okay, thank you for that. My next question, you mentioned innovation, and I think I'll just go right into it. With the current financial landscape as it is, there are many diverse players.
So when you're solving a problem from the customer, there are two things. It's either you're following their journey or their activity cycle. So if you look at the ecosystem, for instance, you're either solving problems for individuals or for corporates. So when you look at customer activity cycle, I can give an example of a typical individual. You wake up, you brush your teeth, you go to work, you're thinking about, how you save up for school. Within each of this, right, there's an opportunity to innovate, right, from what happens traditionally. So if you look at the ecosystem today of what traditional financial systems have typically done, fintech is really just saying, how do we embed technology into the entire value chain to make things quicker, faster, and more convenient?
Shifts. And if there were any issues that I would be very, very worried. And I would start with saying that if you talked about how fintech companies can help, I would start with saying that there is this, and I was discussing with him before we came up stage, there is this thin line between the traditional banking sector today or the traditional financial services sector today and fintech. There's just one thin line that divides us, and that thin line is trust. That's just what divides us. And the traditional sector still has this number of customers. I wouldn't say active customers, I'll just say have this number of customers still with them, because the guy on the road is saying, if I take my money to Plenary online bank, is my money safe? Will this guy last for the next 5 years? Will my money just go? Oh, I know this bank has been here for the past 75 years, so I'm safe right here. So the moment we, as players within the ecosystem, were able to define that trust and say to the market that we've built this thing, trust us that it will survive. And I'm very happy for the likes of Paystack, Flutterwave, who have been around for a very long time. Come to think of it, while I was still working in the bank, we were doing business with these guys. I've left the bank how many years now? We're still doing business with them because we're still collaborating within the ecosystem. So in terms of consumer behavior, the onus is on us as stakeholders in the ecosystem to define this trust and say, trust us to deliver, trust us to keep your funds very safe.
That can be achieved by navigating complex regulatory issues can be achieved by fintechs who well define their strategies. If you well define your strategy, you'll be able to navigate these complex regulatory procedures. Also, professionals, entrepreneurs would also be able to do this by collaborating with legal and compliance experts in order for them to be able to ensure that their organizations meet regulatory requirements and avoid potential pitfalls. This is one way, or the best way I would say, that you are able to navigate this very complex structure, because if you look at what is applicable in this part of the country, if you go to just Ghana, for example, it's a total different ballgame. The way we transact here is totally different from how the Kenyans transact. M-Pesa, Momo money is widely spread, and that for Nigerians are not exactly known. There's still a market that's untapped, which is what we call the USSD here. But outside of this area, it is the way to actually carry out transactions and businesses.
And I just want to add that there needs to be a shift at the mentality level as well. In startups and entrepreneurship, we talk often of move fast and break things. And that might be okay with e-commerce, but it's not okay for fintech, right? There needs to be a mentality of compliance and procedures. And it seems that it almost in times comes in conflict with innovation, but it can. Like, in order for us to win in the respective markets that we're in, and I believe deeply that our most important moat as a company is compliance. Like, we're gonna have to safeguard our users' data at a higher level of standard than anyone else in the market. Because if we take that short-term approach to just building and growing at all costs, of trying to get, in fintech we talk a lot about TPV, total payment volume, trying to get the next $1 billion of TPV without taking into account those important controls and procedures, will be a short-term focused ecosystem, and we won't build the infrastructure needed to create that much stronger trust line between banks and fintechs.
Adopts an open culture in the organization. You'd be holding back at times when you should be letting go, putting decisions in the hands of people to drive change. And you must understand the people themselves are the catalyst of change in any organization. So innovation lies in the hands of your people. If you do not open up to allow them run the race, you'll be stopped.
The innovation is only valid and relevant as much as the exposure to what that actual relevance to the customer is. So if I'm going to refer specifically to the banking financial sector in Nigeria, it comes down to that. So how we've helped bring that exposure, that expertise from other African markets to the Nigerian market, to the banks that we deal with, this is basically what the relevance, and this is basically what validates the whole innovation process, besides the actual technology tools that enables that to become a reality.
Startups should be able to build minimum viable products easily without spending a lot, right? So when you reduce the barrier of entry, you actually make it easier for them to innovate, and the use cases that come out of that. I mean, one of the biggest startups globally actually came in, built something from scratch that kind of revolutionized use cases in the different industries.
On top of that is partnerships. The panel has emphasized the need for partnership. It brings about agility, faster go-to-market, and still mentioned cost, because that is what you get when you partner.
There's this general mindset that they need to do everything themselves. So in order to increase valuation, everything needs to be my own IP, right? I need to invent everything from A to Z. Whereas if we look at carefully at some of the most successful startups, even within the 5-year range, let's exclude even the unicorns and the large examples globally, you'll find that an IP could even be as simple as just creating a business idea, a business process. There could be a particular technology aspect IP developed by you, but at the end of the day, that does not really mean that you don't need to reinvent the wheel and just develop everything and just get all your investment money into hiring armies of developers and just building everything from scratch.
For more on well-researched and balanced stories, events and interviews across business, tech innovation and lifestyle, please like, share and subscribe to this channel, www.youtube.com/Digivation Network.